Valentine's, do not forget the cards and flowers, fellas. I'm going today to get mine. Let's talk about this week. Rates not doing great since we last did this video. So here's the week over week. You guys can just see that last week, if you remember, and I know you sit there and memorize all of these slides. Last week it was closer to 7. We're up a little bit, and the big reason why you see this last week here. Remember, red is bad, like down is bad. And we basically, whether it's talks of tariffs and other things like that, the economy's doing great, blah, 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 all that stuff, it hurts. So the thought of inflation, and then you see yesterday's number, and here's where it's going to be really interesting moving forward. You see today's green, that is good. I'm so glad we're back up. You see yesterday's red. I'll explain that in a second, but the good news is today we're getting back what we lost yesterday. The problem is that black squiggly line above us is the 50-day moving average. That is now our opponent. That is bad. It's now above us. So you see how the weeks before it was a floor of support. Now we got to break back above it. So we may be at these higher rates here for the foreseeable future. And you see that little two squiggly lines down below in the separate chart, the black and the purple. That means we may unfortunately be staying where we are and drifting in this sense lower, which could be a bad thing for rates in the near future. So we'll see what happens. Here's basically what happened yesterday. That kicked us in the gut is the CPI came out, and we were wrong. We've been saying this inflation report would be the first where we start seeing things decline. Nope. Basically, the markets were predicting the decline like we were, and it increased. So the CPI went up 0.1%. While that doesn't seem like much when you're expecting a decrease, that's not ideal. So this is the headline, meaning it's got food and energy, which is relatively tame here. It's mainly shelter was a big piece of that. Food, eggs were a big piece of that, believe it or not. Used cars and motor vehicle insurance, those have been high, and that's not the surprise. The CPI core, meaning they strip out the food and energy, go into the shelter component, as I just mentioned. The lodging away from home has a huge bearing on this. And again, the numbers you don't have to get lost in, but look at the chart, the very bottom right, looks like an EKG chart. You can see how much that can vary from just month to month. And that's, for example, back in July of 2021, it was a 7.5% increase just month over month. So that's pretty amazing. And lodging away from home means hotels, things like that. So it's amazing how volatile that can be. And that's a big reason why the prices were higher. But today's PPI, producer price index, that showed that maybe things were cooling off. And that usually the producers translates over to retail. And that's why they think maybe today we got back some of those gains. So we will see. As far as the economy, the job openings, the jolts, we saw it with the job reports, 2 weeks ago. But supposedly the job openings are less and less and less, which could lead to a weaker economy, which could hopefully help our rates. Time will tell. Inventory, last week was big on new construction and inventory, things like that. So this is a quick follow-up from that as far as just the interesting part here that I want to show is that chart, the bar chart down the bottom. I didn't realize this. Texas, so Florida and Texas, 1 and 2, 10%. That's the amount of home builders incentives on an unsold inventory home. They're giving 10%. And I know that's true, especially in Austin, San Antonio. Our company works with builders down there where they're literally giving 10 points, 10% to help people buy down an interest rate. That means those people are paying it's a combination, right? They're paying a little more for a house, but they're getting a very favorable rate. That's the trade-off, right? They're paying more for the house because the builder's able to give 10 points to buying down the rate to get some in the fours. So for the builders out there, if you're watching this, understand that is a strategy. You think, man, I can't raise my prices. You can if you're giving that money back to the buyer to help them get a lower, more affordable payment via an interest rate. So that is amazing. I had no idea it was that high all around Texas, but there you have it. Florida and Texas builders are giving away 10% as incentives. So I thought that was really interesting. Living wages. So this was done by an independent group. That this is the cost, air quotes, normal cost, right, for a family of 4 to survive in each state. Hawaii, a whopping $259,000 for a family of 4 to have a quote normal type life. Texas, or at least under the 6 figures. So good for us. You can see around the country, it gets more expensive, but I got to tell you, Texas, as far as the big states, we seem to be the lowest or close to it. You can argue Georgia might sort of be in there, but for Texas, for all the big cities we have, that's what makes this such a great state to be. And sticking with the zip codes, this is now the most affordable for renters. I'm actually very happy that North Texas is not on this list because as a mortgage person, I do believe that buying is better than renting long term. I do think there are moments when people should rent, but overall, if you're in San Antonio, Texas, supposedly it's one of the most affordable zip codes for renters, and that makes it to where maybe it's more challenging to convince somebody that home buying and home ownership is worth it. Because I do think it's worth it. I'm not going to belabor that point. You're watching this because you're probably in the industry with me, so I'm not going to worry about that. But I thought that was interesting. 10 wealthiest zip codes here in North Texas. We knew a lot of them in Dallas, but I had no idea about some of those over in the Fort Worth area. And I got to be honest, I forgot. I looked it up. Number 19. Where the heck is that? Man, that's not Mansfield, Burleson, north of Burleson, Crowley area. So I'm not sure what technically that is. I don't know if it's Mansfield or Fort Worth or Crowley, but I had no idea that that zip code was so prevalent to be there in the number 19. So there you go. Roanoke too, by the way, killing it. Top 25. Who knew? Should retirees pay off their mortgage? I had this question earlier this week. I'm not saying reverse mortgages are the way to go. I'm saying they can be a great tool for the right people, but I did see the stat, thought I'd throw it up there. Apparently, this was surprising to me, so I'm sharing it. 41% of homeowners between 65 and 79 still have a mortgage. Their average mortgage is $110,000. That's kind of not the average, I'm sorry, the median. There is a difference. But still, I had no idea it was that high of a percentage from 65 to 79 still have a mortgage. So I do believe that having the liquidity is super helpful, whether that's through a line of credit or just having a mortgage balance. I think in today's world, anybody that had a mortgage that they got with a 3 or 4%, like we absolutely recommended during COVID, not to pay cash, they're loving us right now if they listen to us because their money's sitting somewhere very safe, whether it's a treasury or bond or note, earning more than their mortgage. So I don't believe in paying off mortgages in a number of scenarios. I think there's other opportunities. So that's where I'd say connect with a financial advisor and connect with a mortgage person who's really good at what they do. This is, I think we showed this one before, but again, it keeps coming up. It's amazing. We took a loan from somebody because they just didn't know how to underwrite VA loans. They thought it was something that applied to FHA and not to VA. And these are some of the common things that are different. So don't FHA my VA. So if you know a veteran or there's a veteran out there that needs a mortgage, again, make sure they're talking to somebody like the Mortgage Mark team that's super good at what we do, so that we can make sure they're having a correct underwriting approval and not being declined because somebody doesn't know what they're doing. And then the fun stuff, guys. If you put Buffett and Bezos together, I was shocked it was so few, but every U.S. resident would get $2,300. I could have sworn it'd be more than that. Musk, him alone, what is this stat? He's 6 million times the average American salary, which, okay, that's just a big number. It's hard to even imagine. But I just thought it'd be more than that if it was only $2,400 a person. So a family of 4, let's go back to that stat, that's about 10 grand. I mean, I'll take 10 grand, but these guys aren't giving it away. But I just thought it'd be more than that. All right, Gen Zers and millennials, stop it. Stop it. Digital shoplifting's a thing where they order something from, let's say, Amazon, that rich guy we just saw, and then they just pretend they never got it and get a refund. Look, I think karma is a real thing. I think it comes back to you. I would not recommend that. Stop it. And then the meme of the week, I do like this. I wish, you can just hear in this old gruffy voice, I wish I married the house, right? The whole marry the house, date the rate thing, guys. I thought that was funny. You know what to do. Forward, share, subscribe, all that fun stuff. Keep the love coming. We appreciate you watching as always. And in spirit of the love, happy Valentine's Day to all those out there. And if you don't, happy, what's the not anti-Valentine's Day, happy Singles Day. Go out and party and have a great time. Have a great weekend.